the investment environment is really exciting right now, right? We have capital markets are open. That's a wonderful thing. We have some really interesting structural buyers coming into our space, if you think about it. We have a stablecoin bill, and that's going to result, by our own government's reports, 3 trillion plus in stablecoins are coming into the crypto ecosystem, right? What does that mean if you have trillions of dollars coming in that's non-yielding? Well, I personally think it's going to be the token of choice in a developing world. Would you rather have your local currency or would you rather have dollars? Probably greenbacks, right?
This episode is brought to you by Uphold, which is a great crypto platform that I've been using since 2018. Uphold makes it easy to buy, sell, trade cryptocurrencies like Bitcoin and altcoins. In fact, they have 300 plus cryptocurrencies on their platform, and they carry precious metals such as gold and silver, and you can swap between these assets. So it's really unique. Uphold is safe and reliable. I've never had any issues with them, and they are 100% reserved. You can review their transparency report. They don't commingle or lend out your funds. Now, Uphold recently launched a great product called Uphold Rewards, and it's packed with many benefits. You can earn up to 5.25% on stablecoins, get 24-hour early access to new token listings, and unlock exclusive crypto insights. And they support a variety of stablecoins, such as PYUSD, that's PayPal stablecoin, Circle's USDC, and USBC. They will be supporting Ripple's upcoming launch of RLUSD. So this is a really great rewards program. And if you'd like to learn more, please visit the link in the description. Hey folks, welcome into the Thinking Crypto podcast. I'm your host, Tony Edward, and we are recording out of Station 3 in New York's Financial District. And my guest is Chris Perkins, who is the president of CoinFund. Chris, great to have you.
Tony, amazing to be back on. How are you?
I'm doing well. The market is ripping after Jerome Powell's statements this morning. I'm excited.
How can you not be? I was literally in Jackson Hole yesterday. I spent the week there. Amazing time. Really amazing conversations with some very senior policymakers. Sure. Look, from my perspective, everything's changed.
Chris, it's kind of surreal. We were talking before the recording. Like, you almost have to pinch yourself. Like, 4 years, over the past 4 years, it was dystopian. It was scary. People are getting lawsuits, and now so many of TradFi institutions are coming into crypto.
Yeah, one of my frustrations is that today, even people were nervous, right? When the phone rings and it's the SEC, everyone's like, "What did I do wrong?" That's not the way it's supposed to be. Right. The way it's supposed to be is that regulators in the private sector work together. Like, we're trying to solve really hard problems. We're trying to position the US as the innovation and the crypto capital of the world, right? We have issues around security, maybe we'll talk about, maybe some issues around how do we balance that with customer protections, privacy, national security. These are hard problems, and the best way to solve them is to sit down with policymakers and talk, right? And that's exactly what I'm seeing now. But that's normal. That's the way it should be. Right? This should not be exceptional. We're supposed to be engaging in solving problems together, right? And then people are like, whoa, the IPO markets, the equity markets, they're open. Like, that's the way it should be, right? Our public markets, we have the greatest capital markets in the world. They should be open. We shouldn't be as scared and afraid. And so, I feel like we've been gaslit into this feeling that, oh my gosh, this is exceptional. No, this should be the norm. And I just wanted to thank all those people who stepped up to serve. It's not easy to serve. You leave the private sector and you lose a lot of flexibility, you wear a suit every day. We have some really amazing people that are trying to make things right, and I'm grateful.
Yeah, and to your point, like Hester Peirce, Chair Paul Atkins, and Marque as well, did changed the SEC completely. We got roundtables, we have transparency, who they're meeting with. To your point, this is how it should have been, but it was completely different.
Yeah, I saw Atkins a couple of days ago, and Chairman Atkins, I should say, because I respect the man immensely. And he, what did he start off with on his panel? I'm going to make IPOs great again, because they should be, right?
And Chris, isn't it amazing? Speaking of IPOs, you have all these crypto companies now going public, doing IPOs. It's again, surreal, but also very exciting. I'm just really curious what the future looks like from an innovation standpoint, which new companies are going to come in, what new technologies are going to build, and much more. Yeah,
so the IPO markets are open, and that's a good thing. But I think there's an even bigger thing under the surface that's about to happen. Right now in the US, did you know 81% of companies with $100 million in revenue, they're private. And so normal people have been locked out of that market, right? And guess what? Where are the most innovative, exciting, fastest growing companies? Where do you make your money? How do you really get rich? You invest in those private early stage companies, but we're not allowing Americans to do it. It's crazy, 81%, right? It's good to hear the chairman, he's saying, listen, it's time for us to unlock these things. And I think the solution here is through what we call internet capital markets or tokenization. I think they're going to work on a couple of exceptions. Like we have a company called Superstate with a program called Opening Bell. But really in the United States, there are 3 ways to take a company public. One is through IPOs, where you go with bankers. We're seeing some of this happen with Circle, right? And this is a good thing because we're making private companies become public via the old-fashioned way, right? We're also seeing a lot of SPAC activity and reverse takeovers. I think we're going to talk about DATs here in a second. But the third way to bring a company public is via a direct listing. And that's where Coinbase did this a couple of years ago, where you take your shares, your private shares, and you directly list them, right? Without those intermediaries. This is where things get very interesting, because if you can come up with a way through tokenization to allow people with access to the internet, the market sets the price in a direct listing. Guess what? Our markets are pretty robust. If you look at the last administration under Gensler, there were only 2 tokens that were known commodities. That was really Bitcoin and meme coins, right? And by the way, I talked about the 81%. What's like the one thing that you could have gotten really early stage if you're just a normal person? That was Bitcoin, right? And it made a lot of millionaires because people were able to access that market, okay? But anyway, let's step back and look at meme coins. Meme coins last year, $140 billion market cap. Do you know do you know how much money was raised in IPOs last year in 24? 30 billion, right? So the Trump token, people hate it, they love it, whatever. $15 billion market cap over 36 hours on a weekend. So the true power of these blockchains is capital formation, because anyone with access to the internet can buy something, right? I'm very excited about the future of direct listings, where we're able to take companies using tokenization on chain and make them available to the masses earlier stage. That's going to be cool.
That absolutely makes sense. And to your point of it hasn't been fair, right? You had these accreditation laws and the SEC has talked about possibly rolling those back. Or do they even need to roll it back if it's going to be in a tokenized form and I can buy 2 tokens if I want?
Yeah, so if you tokenize a security, it's still a security. And so we do have to go and look at like, hey, what are the principles behind these rules? Like, why do we not allow certain types of people who don't make enough money to access certain markets? Is that equitable and fair, or is it not? And by the world has changed. People have a lot more access to information. They have access to Chat GPT or LLM of choice, right? So retail's a lot smarter these days. And so, do these rules make sense? I don't think so.
Yeah, and to your point, like as myself, who first got into crypto and investing, I didn't know anything. I'm an immigrant kid. My parents don't know. They're just working hard, right? And when I started learning about TradingView and how to look at charts and then how to look at SEC filings and what is the Fed saying and everything's online, I got more knowledgeable. So why can't I participate? Why do I have to be accredited?
Totally agree with that. But yeah, I think the investment environment is really exciting right now, right? We have capital markets are open. That's a wonderful thing. We have some really interesting structural buyers coming into our space, if you think about it. We have a stablecoin bill, and that's going to result, by our own government's reports, $3 trillion plus in stablecoins are coming into the crypto ecosystem, right? What does that mean if you have trillions of dollars coming in that's non-yielding? Well, I personally think it's going to be the token of choice in a developing world. Would you rather have your local currency or would you rather have dollars? Probably greenbacks, right? And now you can access them for the very first time in a very easy way. But the problem with that is that they are non-yielding. They're depreciating assets. So what are people going to do? They're going to go into DeFi, right? And then they're going to go and they're going to find their agents. We have a company called Giza, and they have a really cool agent called Arma. And this is not investment advice, but they can actually go and optimize that yield, right? And so you have this one structural buyer coming in. Those are the stablecoin folks, right? And the hop is going to be DeFi and AI agents to optimize. You have another structural buyer, which are the 401ks coming in. Trump made that executive order. So that's new capital coming into the system. And then you have this third innovation that a lot of people didn't see coming. And those are the DATs, the digital asset treasuries. And so against regulatory de-risking, against that structural buying, against macro, we saw what Jay Powell said today. It's a really interesting time to be in the market.
Yeah, it's exciting. It feels like we've crossed the chasm and there's no looking back. This thing is ready to go. You worked at CitiBank. Just last week, I think it was, we heard a report that CitiBank wants to launch your own stablecoin, get involved in crypto. What are your thoughts on all these banks now looking to jump in?
It's pretty funny. I've spoken to some very, very senior people at the banks, at the operating committee level. And what they'll tell me is pretty similar. It's a little bit different per bank, but essentially, hey man, for the last 4 years, the regulators would come in and say, what are you doing in crypto? And I would say, I'm not doing anything. And they would leave me alone. And he's like, now they come in and they say, what are you doing in crypto? And I say, and they say, why are you not trying to fix your settlements? Why are you not trying to improve, your tech systems? And they're like, so effectively, they're really trying to catch up. I think it was pretty amusing. You saw the ABA come out against some of the Genius Bill provisions. They're like, wait a second, you can still get interest? And as they start learning about that, they're like, uh-oh. But look, the banks are smart. There's one thing that continues to hold them back, though, and those are the regulatory capital rules, the Basel rules. So banks have to hold capital based on their behaviors, and the BIS still requires them to hold a lot of capital. So it's still kind of holding them back. So that has to get solved for them to really participate. It's a long story, but watch the Basel rules, and you can go to BIS, and they continue to indict, and they hate stablecoins, and they hate crypto. They're going to have to either figure it out or be left behind, but that's holding the banks back. But generally speaking, all of the banks are now moving. The other thing that they've struggled with over time is talent, right? So when bull markets come, people, as they start learning about the opportunity in the space, like, wait a second, I can go into Aave, wow, this is so cool. They tend to jump native pretty quick, but you don't see too many native people jumping back. So they're going to have to really figure out talent. I know there's a lot of talent challenges across the traditional finance.
So I'm curious what the pie looks like when you slice it, maybe by 2030, right? Will banks be offering crypto custody, trading, and access to all these things? And maybe it's more for the boomers and the generation after. But for the younger folks, maybe they're just doing it in Robinhood or their apps.
Man, it's really hard. I'm a big believer in convergence. And so, let's just look at the DATs, right? The digital asset treasuries. So we spent all this time talking about tokenization of real world assets, right? That's where you take something and you turn it into a token, right? And then once it's a token, it like runs around in crypto land, and you know how it works there. You send it to DeFi, whatever. Now all of a sudden we have these DATs that pop up, and what we're doing is we're taking crypto native tokens and we're turning them into securities, right? Securities used to be a death sentence under Gensler. Now it's not. Now it's actually really exciting, because as a security, you can navigate all the very scalable, enterprise-ready infrastructure, prime brokerages, margin lending, all this stuff, right? And so as we see the world going forward, look, people are asking me all the time, these DATs. Is it a bubble? Is it this? Or is it here? Are they here to stay? My answer is usually like, yeah. Because look, there's a little bit of, there's a lot of hype right now. But at the same time, if you're a major foundation, it makes sense to have that foundation going forward, and also that DAT, because now you can avail yourself of all that traditional infrastructure and capital markets that really make our country great, very scalable. Right. So how do the banks end up? Somewhere in between. I mean, they can service a lot of the DATs today. It's just plug and play. A lot of the traditional players can enter the DATs. And for some folks, entering through the traditional window is going to make sense. But for others, who, like my kid who's trying to figure out how to open a bank account, but then he opens a phantom wallet and goes crazy. Like, maybe that's more natural for them. But in the end, these worlds are going to converge. And it's going to be really, really interesting. And by the way, there's going to be basis, right? There's going to be trading opportunities. Can you trade an ETF against a DAT or a future? Like, I think the future is like one common UI where you have your equities, you have your tokenized products. You have everything all in one place. They all have slightly different economics and things going on, and you can trade them against each other.
With the digital asset treasury companies, are there any risks that you see outside of mismanagement? That happens in every industry, every company, right? Doesn't matter if it's crypto related or not. And related to the bubble conversation, are some of these folks raising too much debt? I don't have a problem if a company says we're taking 20% of our cash on our balance sheet and buying some Bitcoin or ETH or whatever. But if I go raise billions of dollars to buy that asset, does that open up a new level of risk?
I think DATs come with incredible opportunity and also incredible, and not incredible, but they also have risk. Let's talk about some of those scenarios. So I talked about the opportunity. Having that wrapper that allows you to access those capital markets, collateral, you can leverage, all these things you can do with any other equity. That's the opportunity set, and it's a very scalable opportunity set to access capital markets. What's the risk? The risk is dude, I was in futures, right? I remember when the price of oil went negative on futures, right? Weird stuff happens, bad things happen. The market is the market, and in my career, you always end up in the tail one way or the other. And so could you have a negative MNAV, which is a multiple to NAV? Yes, it's happening, it's happened, it will continue to happen. A good management team will be able to navigate those instances, right? And so as you start thinking, and I'm again not investment advice, but if you start thinking about underwriting one of these investments, what should you consider? Well, you got to look at the management team. You got to look at the fundamentals of the underlying token, right? You have to look at their ability to interface with those. Do they have the expertise? Not only in the treasury operations side, when to issue equity, when to hit the ATM, when to issue converts or whatever else. They have to have that expertise. They also have to have amazing investor relations. So there's many, many elements. Where could things go wrong? Well, if they don't have sufficient capital put aside to help support the MNAV, should it drop into a negative situation? Do they not have the right controls? Is there an issue with security or slashing? Do they have insurance? But as these things mature, you're going to see, or do they take too much debt, right? And then the token crashes. That's why you have to really understand the management team. Now, here's the good thing. These are public securities. So they have, like it or not, some people hate stocks. They have regular, reporting, where they have disclosures. They have all those things that every equity needs to have. So, if you're a normal person, you can read it or you can load it up into ChatGPT and see what it says. Right. But for sophisticated investors, they're going to be able to look at how the company's being run, just like any other security. And this is one of the beautiful things of that wrapper.
In addition, do you want to also look at if these companies who have the normal business operation where they're generating revenue as a real business and not just, we're just going to buy crypto?
Yeah, I'm so happy that you made that point. There's a couple things to look at. Do they have an operating business? Does it contribute or not? But even within the asset itself, this is what gets me really excited. And I was talking to some analysts today about this who now are looking at and researching the equities. Take an asset like Ethereum, right? Yes, we've seen Michael Saylor's prove that DATs can work, through various treasury operations, and he's been able to drive a really superior MNAV. So good on him. But Bitcoin doesn't natively yield. Ether does. And so one of the things that we built at CoinFund was we built something called Caesar, which is the composite Ethereum Ether staking rate. It's essentially the risk-free rate of Ethereum. And so essentially that serves as a beta now if you're in Ethereum, because that's going to be one of the natural drivers of your MNAV, because you have ETH and now you have this real yield around 3% or whatever. That's table stakes, because if you took that ETH and you staked it, you should make at least the Caesar rate, right? Now what we're looking out for, how do they outperform that rate, right? And again, the higher yielding asset, the higher you can yield, the more it contributes to the MNAV, because it's going to generate additional yield and profitability over that asset. So this is where things get really interesting as the sophisticated folks come in to manage treasury ops, not only on the equity issuance, but also on the yield side of things. Do they know how to use DeFi? Do they know how to use, staking, restaking, and do they deploy insurance? Do they insure the yield? We were actually seeing for the first time, not only insurance on slashing, but also yield itself. And so as you start entering into this world of yield, there's a lot of opportunity, but there's also risks. Anytime something is yielding, usually there's some kind of risk associated. So you need to make sure you're able to manage slashing risk. You're able to manage lost yield. And we're already seeing products coming out in the insurance realm that do that. And then expertise and there's other types of risk as you enter into DeFi, hacking and things of that sort, smart contract risk. This is where things get really interesting. We've got a number of different, token projects out there now. Their ability to drive that yield, in addition to having that knowledge of treasury operations, is going to be really interesting to watch, and that's how they're going to differentiate.
Is CoinFund assisting any of these companies or working with any of them?
Look, we've been in the space for a long time, and we work with a ton of projects. We've been highly involved in this space. We have some real expertise. One of the cool things about our background is that many of us come from traditional backgrounds. My background was largely in the futures and derivatives space. My partner, Seth, he spent 18 years underwriting equities. And so as you see, and that was always our thesis, it was one of convergence. And so we wanted to bring the best of the old with the best of the new. And so as we're starting to see new forms of derivatives evolve, I'm like, okay, that makes sense. Or, this new type of equity, a DAT. We're able to say, well, okay, let's look at it through an equity lens now because we have that underlying expertise. And so we've been very, very active in the space.
How long do you think this trend continues? Is there a point of where these assets become less volatile because more liquidity comes in? Is it a 10-year lifespan or more than that?
So markets go through cycles. I don't think we've seen the top of this cycle yet personally for the DATs. I think we're still starting to see some amazing projects coming online. And I think as we get into the fall, you'll see a number of really interesting, innovative new products. And that's going to be, that'll attract additional capital flows. And remember, this is all against a backdrop of regulatory de-risking. So a lot of institutions, they're still getting their act together to say, okay, now I can do it. What's my business model? So I still think we're looking pretty good, but markets are cyclical, right? They go up, they go down. I think in the long term, as I mentioned, I think these DATs are going to be a permanent part of market structure, right? Where you're going to have a foundation and you're going to have a DAT. Maybe if you're a big project like Bitcoin or Ethereum, you'll have a few of these things. But again, the DAT is that interface to the traditional side, right? The DAT is where you're using that token exposure, to be cross-margined against something else from another equity that's somewhat correlated, right? So this is going to be a permanent part of market structure, I believe, and it's going to have a pivotal role. I was talking to a founder of one of the top projects in crypto, and he was really struggling with the DAT. He's like, I don't know if this makes sense. And after a long conversation, I tried to explain. He's like, do I support one of these guys as a foundation or not? I don't know why I want to do it. But it's really important to recognize that this is a new important part of market structure that provides structural buying potentially, and also a really important interface with the very scaled world of traditional finance.
And as you mentioned, the DeFi component where they can do a lot more with the asset and continue to earn.
So let's talk about this a little bit. So we talked about tokenization. You take a real world asset and you make it a token, right? And now we're talking about the inverse, which is you take a crypto native asset and you make it a security, right? Pretty soon we're going to go another hop and we're going to take a crypto native token. We're going to make it a security, and then we're going to tokenize the DAT, right? I don't know if we're going to make a security after that, but why wouldn't we have a tokenized DAT?
Yeah.
Because now we can trade that against other tokenized products as well. Bitcoin against the DAT. Now you have a natural delta. If there's a positive map, you can start trading basis in the same tokenized world, right? So again, what does this tell me? It's this massive period of convergence made possible through some of the regulatory progress we're made, and there's so much opportunity out there. We haven't even got to tokenized DATs yet, right? But pretty soon you're going to be able to trade them against each other, against the native asset.
To your point, a lot of the crypto platforms are now launching tokenized stocks, looking to go 24/7. What does that world look like with 24/7 markets? Is it, to your point of convergence, we have AI agents that can help us monitor our portfolio when we're sleeping?
I mean, it has to go to 24/7. And if you look at some of the I'll tell you, I think the biggest systemic risk that we have right now is that we have one market that's moving 24/7, rebalancing, risk is rebalancing, and you have one that's taking time off at night and on the weekends and during holidays. When there's a stress, one system's going to quickly rebalance, the other one's not, and that system's going to die. So that is not a good space to be in. And that's one thing that we definitely have to address.
Chris, do you think stock markets will still exist 20 years from now?
Yeah, 100%. I'm very excited about this. So if you look at tokenized equities right now, like I talked about the way that we're going to be able to use them for new capital formation. I'm really excited about direct listings as well. But I'm actually most excited about private equity tokenization. Yeah. All right. So Robinhood did something around this with OpenAI. Love those guys. I know Vlad was just on here. And it was executed a little bit clunky, but I thought it was genius. And so let's talk a little bit about what that meant. As I mentioned, 81% of companies are private. That's not cool. And then you have this thing called tokenization where anyone with access to the internet can get access to these things. What I think is going to happen in the future is that you're going to have exciting companies. And rather than someone just acquire some of their private equity and try to tokenize it, they're going to work with a provider. And the regulators, I think there's some regulatory work to do as well. But what if you ever see one of those anglerfish down in the great depths of the ocean? It has a little it has the little light and it tries to attract people and then it bites it. I think that you're going to see companies work through tokenization to start issuing out a little bit of private equity to see how the market responds on crypto rails, right? And to the extent that it's received well, and they can capture a pretty liquid price pretty quick, it'll give them an indication of when to take their company public. So I think that's going to be something on the horizon. I'm excited to see more. We need to find a way to get private equity and early stage investments to the masses. It comes with risk. We need to disclose those risks. And then people need to be able to underwrite, do their research, and have access. But I think these days of telling people that they're not allowed to participate in the most innovative companies is coming to a quick end. And I think a guy like Chairman Atkins is going to do that.
So with that access being opened up, are you envisioning it's a global movement? Because right now, certain people in Africa or India, they can't access the New York Stock Exchange. But if you tokenize it, I could be in anywhere, to your point, having a smartphone with internet connection, boom, I can buy 5 tokens of a tokenized private equity.
It's already happening. It's already happening. And you're just going to see more and more of it. I think that's a great thing for capital markets. Why wouldn't we want our capital markets to be global? Why? The SEC's job is one of their jobs is capital formation and to protect investors. Clearly, they're focused on the U.S., but why? I mean, look at stablecoins. This is the best thing that ever happened to the dollar, right? There's almost an insatiable demand for it overseas in a developing world. Right. Why wouldn't we want to take this step after stablecoins and let our companies, let anyone in the world with access to the internet access to the innovation that's happening on shore via our companies? I think it's a very good thing. Right. Now, look, there's some national security things that we have to be monitoring, and there's ways to do that, and we could talk about it, but I think it's a good thing to globalize markets.
Yeah, and one of the items in the thesis of opening up blockchain rails and stablecoins was to bring financial services to people who don't have access to banks, and they're living in poverty, and now this could help them change their lives.
I got so annoyed. The BIS, the Bank for International Settlements, they published this paper and they said stablecoins are going to undermine local monetary policy. And they're right. It is going to undermine local monetary policy. And they said, in some places like Zimbabwe and Venezuela. And I was like, yeah. And that's probably a good thing.
Good thing for the people.
I've lived in some pretty rough places in my life. And it's not a bad thing to keep a despotic government honest, right? By providing a dollar alternative and giving people access to financial services for the very first time on their phone. I think that's a good thing.
It's a good thing. Yeah, it's like the local central bank is like, we want to keep printing and debasing. How dare you bring in your stronger currency?
Right. And look, we have a problem with debasement in this country as well. Sure. Maybe that's why we have a strategic Bitcoin reserve, and there's an answer for that with some crypto assets and commodities. But yeah, I think it's a good thing to have people being able to access the dollar.
Chris, hard question. Because with the emergence of this technology and all the benefits, maybe 50 years from now or 100, we're gone. Do you think this technology can be used to fix the fiat system or change it to a brand new system where there's not this debasement?
I don't know, man. It feels like when I just had a chat with Arthur Hayes, and when a government has a printer press, it's really hard not to use it.
Yeah.
So I think that's
True.
the underlying thesis of what we saw with Bitcoin and its white papers. So that I think maybe the dollar keeps local currencies honest, and maybe crypto keeps the dollar honest.
Yeah, that's a good way to put it. Yeah, I have a 7-year-old, so I'm curious what her life is going to be like in the new world with all these technologies, but also will they continue to debase, or will they somehow use blockchain and AI to curb this debasement? I don't know.
I think the printer
they're
press
gonna
is
keep
going to
going?
keep going. I'd be surprised if it doesn't.
Sure. Now I want to jump back to banks offering crypto. So do you envision that, Chris, I don't know who you bank with, but your local bank manager may call you up and say, hey, we now offer the ability to access Bitcoin, ETH, and so on and so forth. We'll custody it for you. And could you also get access to certain stablecoins to earn yield?
Probably, yeah. I know many of the banks are already working on their custody solutions. Now, they're starting pretty slow with things like Bitcoin and ETH. They'll continue to go down, I think, the curve. It's going to be interesting to see how they compete with the Robinhoods and the Coinbases. You're seeing a lot of convergence now as well, where Coinbase has an account. You can use that for almost a bank account. They're competing with the banks direct. Do people start? It's not banking per se, but it's using those same services. So I do think that there's going to be an interesting battle and interesting partnerships that will be forged. Like, you're going to hear announcements about big partnerships because, like, a lot of these banks, it's hard to get the talent. So it's either build or buy. And so in many cases, partnerships are going to be forged. Be on the lookout for some of those in the near future, because that's the only way that they can kind of leapfrog the competition is through big partnerships. M&A as well. M&A is tougher for banks because a lot of regulatory reasons prevent them from time to time. But so you'll see some building, I think a lot of buying, and a little bit of M&A.
I just had Coinbase's chief business officer on the pod, they just announced their partnership with JP Morgan and PNC Bank. So
of course.
It's happening. And of course, I would love to be a fly in the wall to see what Jamie Dimon is saying behind the scenes.
I think Jamie Dimon likes to make money, and he's good at it.
It's so funny. I don't know, he's been crypto's final boss, if you want to call it that, and he's capitulated. Right? Bitcoin's final boss.
Yeah, I saw even Sherrod Brown, one of the senators who just hated crypto last cycle, now yesterday said that it's part of the economy. I'm like, oh, interesting.
I used to call him the top general in Elizabeth Warren's anti-crypto army.
Yeah, he said something like not negative yesterday, and I was like, huh?
Oh man, how things have changed. I would love to get your thoughts on the market. Obviously, we're recording this on August 22nd. Jerome Powell made his speech at Jackson Hole, and the markets are ripping. So do you think the top is going to be Q4 or Q1 2026? Not financial advice.
Yeah, it's hard to call the top. What gets me excited is the fact that you have real regulatory de-risking, right? Everything is becoming normalized. You have the $3 trillion in stablecoins coming in. You have 401k money coming in. You have DAT buying coming in. And that's even before the normal sources of capital, like private markets, all those allocators. In the last cycle, people were trying to figure it out. Some of them made it. Some of them got burned. But now as it's normalizing, so it used to be people would have a lot of reputational risk for being in the space. Investors are always comfortable taking market risk. That's what they get paid to do. They do incredible analysis. Sometimes they get it right, sometimes they get it wrong, but that's their expertise. They don't get paid for reputational risk. And that reputational risk manifested itself in regulatory risk last cycle. Now that regulatory risk is gone. There's still some elements of reputational risk, I would argue, maybe around security, like you do this amazing investment, you get hacked. But by and large, the reputational risk, now there's reputational risk if you don't have a crypto strategy. So you see all that structural buying coming in as well. So I remain bullish. And then, of course, we're seeing the Fed now projected to lower rates. So macro seems to be lining up. Then you have that the normalization and the buying. Like, I'm pretty bullish. And I think it's hard not to be.
Yeah. I think all the stars are lining up here for us. The 401k item, I don't know if you can give insight into this, but I know Trump signed the executive order. Do you think there's some sort of lag? What do you think the lead time is?
There's always a lag. So, again, you're seeing the de-risking happen. Trump hasn't been in office that long this time. institutions like they move like aircraft carriers, right? So they were like going away from crypto. Now he's like, okay, it's back. So it just takes time to pivot, and they have to go through all different types of governance processes where they have regulators. So you're going to see a ton of latency, and that's why that the structural buying and the moving into our space is still building, because they have to put, let alone just wanting to do it, the infrastructure. They have to find custodial relationships. They have to find middleware, reporting to their end users. Then they have to do all of that within the context of whatever regulatory wrapper they're in, if they're an RIA or whatever. This stuff does not happen overnight. It takes months, maybe a couple of years to be fully loaded. So we're still building. They're not here yet. There's
a lot more to do, yeah.
Yeah, it's not mature yet.
CoinFund, what's the latest and that you can share as far as investments, companies, coins, projects you're investing?
For sure. So we have 3 major strategies. We have a pre-seed seed strategy where we're looking for early stage founders. We have a Series A and B strategy where we're looking here. These companies have matured beyond seed stage. They have business models, teams, a little bit of product market fit. So we invest in the most exciting companies at that level, all across crypto, of course. And then we have a liquid strategy that is looking to take advantage of, looking to invest in the most exciting token projects and the most exciting now equity projects. As you look at DATs and everything else. So what excites us, man? There's a million different themes. We've been very, very active. My partner Jake is very early on the intersection of AI and crypto. That's been something that's been core to our thesis since 21. Like we're really early there. But look, we get excited across the board. Lately, we've been doing deals in the consumer space. We'll do DeFi, CeFi. Infrastructure still gets us excited as we're starting to create that foundation. And then I think there's other big themes that I get excited about. I like to, kind of operate on the intersection, always looking for projects that are, I think fixed income has a long way to go. Derivatives markets. One of the biggest gaps in crypto markets right now are derivatives. Like, yes, we have perps, but we're lacking like listed derivatives. So I think that's an interesting space to be as fixed income starts crystallizing, because institutions love fixed income. We don't really have like massive fixed income markets in crypto. We have perps, but there's a lot of other fixed income elements that I think, look, I've talked about this often. Staking is a rate. And so we're going to start seeing more structured products around those rates. Really exciting for me. But yeah, we're super active. We're out there meeting founders every single day, looking for the best projects across payments, you name it. And here's another thing people don't realize. So if you look at the world, I think there's like 30 million developers in the space. I talked about the capital that's now coming back into the system. But when you think about it from a founder's perspective, we think there's like 30 million or so developers. A lot of them stayed out of crypto because it was scary. They don't want to go to jail if you develop or whatever. Now that regulatory de-risking is happening and the markets are coming back, they're like, wait a second, maybe I can join this crypto space as well. So you're going to see talent coming back. Big deal. And, don't hold me to it, but I think there's only like 10,000 full-time developers in crypto right now against 30 million in the world. So let's say I'm off by a factor of whatever. There's so much opportunity for these new developers to come into our space. And then the magic happens. Capital, new founders, like innovation.
Absolutely. Well said. Yeah. And now to your point of the de-risking, they don't have to look over their shoulder. They're going to get a Wells notice or sued by the SEC.
Yeah, or get thrown in jail. Like,
yeah, right.
Like, seriously.
Roman, yes.
Yeah, Roman storm.
Yeah, just crazy, that situation. Chris, this is a hard question, but I want to get your thoughts on it because I've heard some other people talk about this. With the emergence of AI, and it's just getting even more smarter and smarter, and things are going to get automated with AI agents and much more. Will funds exist in 10 to 15 years?
100%. So I think agents are going to have a huge role. I think AI is going to have a material role, but you're still, like I said earlier, stablecoins to DeFi to agents. Agents are amazing at optimizing. They're so good. But we also have to make sure that we work closely with those agents. And I think at the end of the day, will there be certain agentic strategies? For sure. But I still think there's a role for humans in how to correctly deploy those agents for the right outcomes that we're seeking. And so, yeah, are people still going to be in the space? For sure. They're going to be working a lot closer with these agents for the right outcomes, maybe toggling their weightings or, changing, toggling and tweaking them, pointing them in different directions, helping them to optimize even further.
It's funny. I heard someone the other day talk about in the world of AI agents, we're going to be more directors, where we're directing all these agents to do different things, almost like people management a bit, right? You're running a division, but it's AI agents running 24/7.
Yeah, maybe that's the case. You're orchestrating them, finding out, but man, they're amazing at optimization. Almost too good.
I can't wait to the day. I'm exploring this to build my own AI agent where I can even sell it, where it can help you navigate the market in certain ways. And, it's going to be a bit tailored and customized to my thesis and point of view. But that is something I'm exploring. I probably shouldn't say it on here. Somebody's going to steal my idea. But and then, on the other side of the token, you have robots. And I've been talking to a lot of robot developers and people who are in this industry. And guess what? They're talking about robots going to use stablecoins and blockchain because they're not going to use cash.
Yeah, we're close with a company. It's called GeoNet. And what they do is they provide hyper accurate location because that's the other leg of the stool when you're thinking about robotics. These robots have to know exactly where they are in a hyper precise way. And so, they're going to use that for directional control. They'll use stable coins to pay. And it's going to be a really fascinating world.
The company's open mind, not to promote them or anything, but what really blew my mind, the founder was telling me that each morning the robot, when it goes up and running, it downloads its constitution from an Ethereum smart contract to abide by the rules that is set. And I think a DAO is setting the rules or something, which is insane. Man, the future is going to be wild.
Yeah, we didn't even get to quantum yet.
Yeah. So do you think quantum's a threat?
I think it's an opportunity, to be honest with you. Yeah. So you'll see next level cryptography.
Use quantum.
Yeah, 100%. Yeah. I'm not an expert in the field, but it's definitely, I follow it. We're seeing more and more progress, more patents every single day. It's something that's moving quicker than I think some people realize.
What are your thoughts on the potential approval of other altcoin ETFs like Solana, XRP, and others, HBAR, and staking in ETFs as well?
I think Jito Sol just came out from VanEck today. I don't know if that was approved or not. Look, it's going to be so fascinating with ETFs. ETFs, the MNAV is essentially one. And so you're going to see ETFs play a role, but DATs play another role. And they're not, they're competing with each other. Well, kind of, sort of, but they're kind of different products. So if you look at ETH as an example, it's been really hard to figure out a staked ETH ETF. The reason why is because ETFs, by the way they're constructed, is they have daily liquidity, right? And so the problem that you have, if you take a bunch of ETH and you stake it, and then you have people redeem, they have to wait for the unbonding window to occur, okay? So it's hard to redeem if you're bonded up. And we've seen Ethereum, like today, the unbonding window is extended pretty materially, right? So if you have to wait 13 days to get your ETH out and you have daily liquidity, that's a real problem, right? And so the solution to that would be you have to hold reserves. But are those reserves yielding? Can you hold them in a liquid staking token where you're still getting that yield or not? It's just complex. I think it will be solved for, but it's just going to take time to figure out. Or you have to, when you reserve liquidity, then you have to bring your yield down from total return to partial return because it costs money to reserve that liquidity. So again, I'm pretty sure it's going to get sorted. There's some really smart people working on the challenge. But the Canadians at first are like, yeah, you can stake it, but 50%. Is that the right number? Is it the wrong number? I got no idea because it's also kind of wrong way risk because if something bad happens and everyone's trying to pull it out, the window extends. So anyway, you're going to see more and more ETFs. Why? Because we're going to know what's a commodity and what's not. And that's one of the things that the SEC wants to deliver us. So very excited about that on the ETF front. You're also going to see that on futures. People ignore the futures market. The futures market bring it all together. Super important. Why? Futures are regulated by the CFTC. So if you know something's not a security, you can launch a future. Gensler suppressed that because if an exchange tried to launch a future, they'd be like, not so fast. That's a security. Stop it, right? So that's why we couldn't even launch like Solana under his reign, right? Okay, so why are futures so important? If you look at ETFs, why didn't we launch? What did he require before we launched the Bitcoin ETF? He required futures because he wanted that surveillance, right? So futures help, liquid futures market help with that type of surveillance. What else did they do? Well, risk management. They help you hedge. For a lot of people, what they want to do is it's the carry trade. They buy the spot and they sell the future, okay? And what that allows you to do is crystallize yield. And that yield, if you're in what we call contango, where the futures price is higher than the spot price, you can sell the future, you buy spot. You buy spot price goes up. Guess who likes these trades? Every single foundation, all of crypto. Futures bring it all together. And what I'm mostly, one of the things in addition to watching ETFs grow is having the futures industry grow with it. This is the most exciting part of our growth. And I talk about having some issues in derivatives because you can hedge, you can drive yield strategies, and you can get that surveillance for even more ETFs. So it's an area, we have a company that's like literally focusing on that nonstop and helping drive more futures products.
That's great insight. And I just spoke this week to one of the folks at Lido, and they're trying to work with the ETF futures to solve exactly what you're talking
100%.
about.
100%. Yeah, I had brunch with them as well recently. Great meeting. And how do they, and what they're trying to do is make sure that they have enough modularity to make sure that staked ETH is accessible to institutions. And that's one of the things that they're working on as well.
Dumb question. Does it make sense to have specifically a ETH ETF and then an ETH staking ETF where you can stake 100%? The disclosure is, hey man, you want your ETH, you got to wait.
You can't do that for an ETF, is you have to have daily liquidity. Okay. But will you have spot and total return? I think so. And you can trade the two against each other, but I think all things being equal, most people want total return. By the way, same thing for futures. Like, why do we have ETH futures? Why don't we have ETH total return futures? So watch that space because I think it's coming.
Interesting. So you think there's going to be a lot of innovation on the ETF front for these assets?
100%. Yeah, you're going to see, because now we're allowing innovation. We're leading with innovation, which again, starting in the beginning, that's the way it should be normally. Will things break? Yeah, they're going to break. And that's okay. Like, we just have to be principles based in our customer protections. We need to let people fail. And if the price goes down, it's not illegal. It happens sometimes. Do your own research and underwrite it.
So on that note, you mentioned earlier, markets are cyclical, right? And then obviously we're talking about the Fed, their macro impacts and so forth. Do you envision there's going to be a deep bear market like we've seen in the past 70, 80%, or maybe less because you have the ETFs, you have digital asset treasury companies, so more liquidity holding the base up, so to speak?
Yeah, look, you always have cycles. I think more liquid markets tend to weather those cycles better. But like I said earlier, my whole career, I always end up in the tail somehow. I was a Lehman Brothers man. Yeah. Like there's no way in hell I thought that one of the titans of Wall Street, Lehman Brothers, was going to go down, and then like 18 months later, there I was carrying out my box. So I'm never going to make any prediction to say it's not going down X or Y because I've been there and done that over and over again. So markets are cyclical, but I think when you step back, it's hard not to be bullish about the crypto space. Oh, absolutely. Like, I'm super bullish.
Yeah, look, I've been talking about it. I hope it doesn't happen, but I was thinking, look, has crypto experienced its .com bubble burst yet? And I don't know if it has, even though we've had bear markets, we had FTX, but we haven't had legislation that gave clarity to allow more to come in. And again, it's cyclical. It's not an indictment of crypto. I'm bullish on crypto and blockchain, but just humans are speculative and we're crazy sometimes and we do dumb shit.
Yeah, I think there's always, the exuberance always enters the market at some point, right. And I think the smart folks will recognize that and know when to take profits.
Another macro-related question, this will be the last one here. It's 2040. Are we not using cash and our payments are powered by stable coins? We're able to tokenize our artwork in our house and do a lot more with DeFi and create new revenue earning options and things like that?
I mean, I think it's going to be a relatively similar experience to today in a way, where you don't think about the back end. Sure. You just pay via whatever way is easiest? Like, do you tap your phone at that point, or do you just look at it and your
glasses
Neuralink,
or,
whatever? But the point is that a lot of this, we get so focused on like the tech and the back end, and we get tribal around Solana versus Ethereum versus Sui and Avalanche. No one's going to care, right? You're just going to pay. It's going to be powered by crypto rails in the background. It's going to be cheap, fast, and easy, easier than ever. Because, we see a million payments companies. They're always improving on something. But yeah, it's just going to be seamless and easier.
To your point, we in the crypto space, we get caught in our own bubble, in our own world, but you go out, talk to the average Joe and Jane, it just needs to work.
Just give me my cup of coffee and let me tap my phone.
Yeah.
Right?
Yeah. We overthink it sometimes, but I guess we're the early adopters. We're looking for new innovations and things. So it makes sense. So Chris, yesterday I saw on X, you and Chris Giancarlo endorse a bill that was issued to fight cybersecurity threats along with crypto. Tell us about that, what that bill is about.
Yeah, so the bill just came out. I'm still going through it, but Chris and I have been pushing for this for so long. So we have this incredible period of innovation, and it's exciting. We have about 3 trillion, like I said, coming into the system via stablecoins. We have things being tokenized. The current crypto market cap is around $4 trillion. That's going north. I don't know where it's going to settle, but we have a problem. And one of the problems that I think in our industry right now is that of security. We have certain state-sponsored actors that have been ravaging and hacking, like the Bybit hack. We've had billions being hacked. And if there's one thing that's going to derail our momentum, it's that security threat. Like people get paid to invest. They don't get paid to have their assets hacked after they made a great investment, right? So to me, this is one of the biggest threats facing our industry. It keeps me awake at night, and it's a tough problem. Now, look at stablecoins, for example. They have this capability we call freeze and seize, right? A lot of crypto libertarians hate it, but it's the fact of life, where you're holding these assets. If they get into a bad guy's hands, and I always say bad guy, not bad girl, because there's some both, but like, you know what I mean? What you can do is you can take those assets and seize them, provided you go through due diligence and you go through a judge or whatever else. It works, but it takes a long time. The problem with the environment that we exist in today is everything is moving fast. By the way, this threat's going to get worse as well, because we talk about AI and agents and deep fakes. Hacking's going to get worse. Their ability to get out of Dodge and turn it into Bitcoin and disappear is going to get better. So it's a pretty dangerous place out there. And I don't want to like frighten away users, because like there's also opportunity. But what makes me excited about this bill, and we've been pushing about this for a long time, we think the solution to this current real urgent problem actually lies in the past. And if you look at our history, during the Revolutionary War, we had no money. And we ended up winning the Revolutionary War. The textbooks will say we won on the Battle of Yorktown. But one of the true driving factors is that we ravaged the British economy. Because what we did was we said, hey, we're going to authorize these private citizens, we call them privateers, take your ship out in Massachusetts and go ravage the British economy. And we did. And it hurt them badly. And that's one of the reasons why the war ended. They came back in 1812, for the War of 1812, Madison commissioned 500 privateers to go after the British. And I think that helped end hostilities as well. Our founding fathers loved this concept so much, and it's called the Letter of Marque, where you issue this letter to an institution or an individual. They actually put it in our Constitution. It's in Article 1, and it gives the Congress authorization to issue letters of marque and reprisal. So the point here is that, and by the way, the Europeans thought it was a dirty business. They got out of it in the 19th century, but we love it so much. It's in our Constitution. It's not going anywhere, just like our guns, I guess. But we think it's time to resurrect this practice. What better way to fight back against hackers and state actors who are maneuvering against our companies, our startups, than to commission private citizens and say, hey, listen, here's your letter. Go for it. Now, here's the killer policy use case. Back in history, they would have these things called prize courts, and oftentimes the people with those letters would have to post bond. Today we call that staking, where if you misbehave, you get slashed. But once you seize those assets back, the privateer gets to keep a lot of them. You give some back to the victim, and you give some to the house. Guess what? That's your way to fund the strategic Bitcoin reserve or the strategic crypto arsenal at no cost to the taxpayer. So that's the vision. This bill contemplates a version of that that thinks about, hey, how do we leverage letters of marque based on our history to go after cyber criminals. But I do think that the private sector are the only folks who are sophisticated enough to be out there on front, to move fast enough to stop these hacks, even before they occur. Here's the last killer thing. During the terrible regulatory climate and lawfare the last 4 years, we lost many founders overseas. But what if we had these rules in place and this incredible security apparatus in place? I think it would attract them back, because people will know, do not mess with Americans, or we're gonna set loose our privateers.
So are they like
go hack somebody else?
Cyber bounty hunters, kind of?
Not really bounty hunters per se, but they're privateers. They're able to violate certain laws. So like I published a paper on this, and people are like, I want to do this, but you can't. I can't trade with you if you're a North Korean, right? I violated OFAC. We need to be able to commission these people to go interface with our adversaries, and to use various techniques and procedures to get that money back without violating legacy sanctions or OFAC laws.
I think that is very much needed.
I think so.
Yeah.
I can't think of anything else that's taxpayer neutral, helps fund the reserve. So I hope that something happens here. I think it's a really exciting way to solve for a big challenge. Like I said, like when you sit down with policymakers, you try to really solve really difficult problems. I think this is one of the ways you can do it. And yeah, are there risks? For sure. Are there ways to mitigate those risks through bonds and things of that sort? Yeah. So let's get it done.
And it absolutely makes sense. I've been thinking about this, noodling on it. Like China, they just announced they're going to push their digital yuan, or stablecoin, I should say. I can imagine that they don't have people looking to take down any U.S. stablecoin and mess up, throw a monkey wrench in the whole system, stuff like that.
Yeah. So if a state actor, whoever that may be, decides to attack, our interests, then we'll have our very sophisticated private sector financially incentivized to help enhance our defenses and those of our private companies.
Wow. Well, folks, check out that bill and call up your representative. I love that idea, because that is a big threat, and this seems like a solution. All right, Chris, wrap up questions. If you weren't part of CoinFund and dealing with crypto, what would you be doing?
Oh goodness, I'd probably be dealing with crypto somehow.
Or in the tech space or finance.
Something, yeah. I don't think I'm going back to traditional finance, but I kind of am, because that's where I was spending my time. Everything is converging, right? Sure. Yeah, it's probably playing with my dogs.
Oh yeah, Chris, pleasure. And you're up in Bryant Park. You're close, so we're gonna have to do more of these.
Anytime, bro. It's good to see you.
Yeah, we'd love to have you as a return guest and get your insights, because I absolutely appreciate it. But thank you so much for joining me.
Pleasure, sir. Thanks, Tony.